On March 18th, 2026, Bank of Uganda will be auctioning off 4 treasury bonds. Now, this is going to be one of the last auction in 2026, financial year 2026. And as you might see, after March 2026, we shall only be having an auction in April 2026, May 2026, and June 2026 to close out the financial year. And what is extremely important for the March 2026, for those of you who monitor the auction calendar, is this is going to be the auction where we have the 2-year bond, the 5-year bond, the 15-year bond, and the 25-year bond. All those 4 bonds are going to be auctioned off for the third time. The last time it happened where all 4 bonds were auctioned off in the primary market was in November. And this is coming at the time when the last 2 auctions have experienced significant drop in the interest rates and the yield, as we are going to pay attention and look at it, especially for the long term bonds and what decision you are going to have to make, especially for those of you who are either buying the 20-year 5-year bond or the 15-year bond. Is it going to be at a premium? Is it going to be at a discount? What is it going to be? What were the results in the previous months? And let's go straight into it, because it's extremely important to see what the results were. Now, let's first go back to January 2026, on Jan 22nd, when the Bank of Uganda auctioned off the last 3 bonds, especially the 15-year bond. What you can see is the 15-year bond ended up bringing in a 16.475% yield, which was a significant drop from the November highs, right? The 5-year bond was the same. Actually, on the 5-year bond, people ended up paying a 7% premium. The 2-year bond ended up coming in also at 15.1 with a very small discount. But what is extremely important when we are looking at this auction that we are coming into is how it's going to play out, especially in the 25-year bond. The 25-year bond is extremely important. Why? The last time they auctioned off these 3 bonds, that was in November, as you can see, was November 27th. The 25-year bond brought in a 17.95%. And people who bought the 25-year bond at the time enjoyed a discount of close to 6%. Now we are in March 2026. The interest rates have drastically reduced from the highs of this. And some of the reasons is because the election is out. There is an aggressive push by the people at the Ministry of Finance to see interest rates coming down, to push it. It was extremely expensive for the government to borrow in 2025. So they are doing everything they can in 2026 to make sure interest rates come down. So what you are seeing in November, what ended up happening in November, where the 25-year bond last brought in a 17.95%, it's not going to be that way. And that's where it becomes extremely important. So, if we are to look at this auction and paying attention to what it's going to be, then it comes down to something like this where you have to pay attention to. So, for example, what we are going to expect on the auction in on March 18th, March 19th. So let's assume someone will be buying a bond of 10 million, right? Given that the 25-year bond has a coupon rate of 16%, it's the second highest coupon rate. There is the 10-year bond, one of people's favorite. It has a 16.25%. There is the 25-year bond, has a 16%. And then there is a 15-year bond, has a 15.8%. Now, every time the coupon rates are that high, it plays into the discount premium element. Now, on the secondary market, where we are monitoring the transactions and experience of where everything is, especially from what the results we are seeing in it on the secondary market in Uganda when it comes to um, when it comes to the treasury bonds, you can see what Bank of Uganda has ended up releasing, that in the secondary market, the 25-year bond is trading at between 16 to 15.5. That means if it's trading at 15.5 and somehow, somewhere, it brings in a 15.5%, it means for every single person that will buy that bond will pay a premium. What will be the premium? It will be that a premium of around 5%. So if we get in a 15.5, you pay a premium of 5%, which you can recover when that bond pays a coupon again in August. However, if it comes in at a 16, because like I've said, from a Bank of Uganda results here, you can see it's trading between 16 and 15.51%. Then, of course, it means if it comes in at that level, you are good. We shall just pay a premium of 2%. So the only rate that will guarantee us not to pay any premium, and I'm talking about premium any data price, is 16.25%, right? Where you literally it becomes very, very small. So I'm praying that for the 25-year bond, it can bring in at least 16.25%. Then that way people will buy it at a clean price of a data price of at par without paying a coupon. This bond, the 25-year bond, just recently paid a coupon on Feb 5th, 2026. So that means it doesn't have so much accrued interest in it. But what is going to be the driving force when it comes to 2 weeks from now? It's going to be the coupon rate, which is 16, which is high, and what will be the yield to maturity. So for those of you who are going for the 25-year bond, just pray that the yield is at least above 16%, and then it will reduce our premium to 2%. If the yield, the cutoff yield after the auction falls below 16%, we shall pay premium. Actually, if it falls below 16.25%, we will pay a premium. That there is no doubt about that. We will pay a premium. And that is the same mindset which we are going to look at when it comes to the 25-year bond. Now, the 25-year bond, the 15-year bond for it, it has a coupon rate of 15.8%. Now, when you look at the Bank of Uganda's snippet, the 15-year bond is trading between 15.5 to 15.2. Now, that automatically, even if it brings 15.5%, right, we will pay a premium, a 5%. If it goes to 15.2%, we will pay a premium. The only way for us to avoid a premium on the 15-year bond is if it comes in at 16.5, close to 50. Yes, actually 16.4. Exactly, 16.4, which is going to be extremely hard given that the last time that bond auctioned off in the primary market, it brought in a 16.475. That was in Jan 22nd. Since then, its counterpart, the 20-year bond, ended up bringing in a cutoff yield of 15.49%. So there are so much dynamics on this auction, and the pressure is so much, especially for the investors who are going to be investing into this auction, but it's still an opportunity to make the money. So for some of us who always hunt for the best results, the best return, our goal is going to be to go for the 25-year bond. It's where we are going to make the money, or at a bare minimum where we're going to pay a little bit of a premium. The 15-year bond and the 25-year bond, they have almost a similar coupon rate, 15.8 and 16%. The 15-year bond, as you can see, it pays between Jan and July. It will pay again on 9th July 2025. So it means that element is there for you to consider. However, the 25-year bond For it pays every August and June, and Feb it will pay again in 6th August. So depending on wherever you go, whichever you go to, if your goal is to maximize return, if your goal is to make the most money out of this auction, you go for the 25-year bond, especially given that it's the third time it's being auctioned off. One other important element to pay attention to is in this auction is that we shall have the 2-year bond and the 5-year bond, which I tell people they are not one of the best because the tax element on them is extremely high. The 2-year bond, as we have already said, it has a 20% withholding tax. The 5-year bond has a 20% withholding tax. So which means the 15-year bond and the 25-year bond are the bonds to go. They are your go-to bonds. Those are where you're going to make the money because they have a 10% withholding tax and they have a higher rate of return in terms of the yield to maturity. The cutoff yield will be better in those two bonds as compared to the 5-year bond and the 2-year bond. For those of you who are risking not to paying a premium, you might want to sit this one out and you wait for the results to come out. Then you go to the commercial bank or you go to the secondary market and negotiate a rate depending on how the results will come out. It's going to be extremely hard to avoid a premium in both bonds. If you are trying to not pay any single premium, like my dear friend said, I don't want to pay any single premium, then the 10-year, the 15-year bond and the 25-year bond, it will be extremely hard. But we have a closer chance on the 25-year bond as compared to the 15-year bond. So if someone is to ask me, Alex, which bond should I go for? If I'm trying to avoid paying a premium, I'll tell them to go for the 25-year bond. It's where the results are. Now, the rates are coming down aggressively. The rates are coming down aggressively. Bank of Uganda is doing its absolute best to make sure the rates are coming down. It's coming at a time when the FX rate is also the dollar. The UGX is losing value to the dollar in the last today when I'm as I'm doing this recording, I was looking at the results of the FX. As you can see on the screen, you can see in 5 days we have moved from 3,500 something to almost 37, and that is unique. That's uniquely different. I know we are dealing with the war in Iran and all those that impact to transportation of things to Africa, the security issues, the movement of goods and services. But it's what it is. So it's going to be an interesting auction when we go through it, especially uh, this time round. And for anyone who is trying to make sure they make the most money out of it, I would tell you, you go for the 25-year bond. The 25-year bond, I believe it's where you're going to make the most money. It might have the better yield compared to the 15-year bond. It's not guaranteed. We have seen a scenario in August where the yield rules were broken, where the 15-year bond had a higher yield, cutoff yield, than the 25-year bond. We do not want to expect the same situation in this time round, but it can happen. So for anyone who's trying to invest in this auction, it's on March 18th. Put in your results, put in your auction forms, send them to the bank as early as yesterday. That way you are ready. Fund your account, review your positions and fund your accounts. That way, by the time the results come out, you are just celebrating to the bank knowing you have made another step towards your financial future. Thank you.